Hello, everyone. This is Zak Gardezy. I'm the host of Money Minutes. I'm also the founder and managing partner of Wealthstone Private Wealth Management. Here on Money Minutes, I'd like to share with you some of the latest market headlines and my outlook for what's ahead. And so for this week, we'll talk about the Federal Reserve's FOMC meeting. So that concludes tomorrow on the 12th, and the Federal Reserve is expected to keep interest rates where they're at. Now, the big news coming out of this meeting is the release of their quarterly dot plot. It's part of their other economic projections that they release, but this is important because the Federal Reserve's FOMC committee members are going to really kind of explain what they think or where they think interest rates are headed. And so it's important because in March, when they last released this data, the expectation, at least based on the dot plot recordings, was that the Federal Reserve would lower interest rates 3 times this year. And so far as the year has gone on, the Fed hasn't lowered rates at all, and they've actually, through other interviews and commentary, have shared that, they may not lower rates, or it would be less than what was initially projected because inflation has been harder to bring down than they initially projected. So this meeting is going to, I think, solidify, at least for the next few months, what the Federal Reserve members are thinking in terms of are they going to lower interest rates or not. And it's really important because the market is now expecting the Fed to lower interest rates possibly 2 times. And there are other analysts and economists out there that think that the Fed may not lower rates at all this year. And so this will help the market get at least a sense of direction as we head into the summer months. The labor market data has been pretty interesting. That's an important piece of the Federal Reserve's decision making. We had the JOLTS report released last week, which helps show job openings among many other things, and that came in better than expected. So it showed that that there are less job openings, so better for inflation, but worse for the economy. Now the non-farm payrolls report, which was released on Friday, that came in way hotter than expected. So we had some mixed labor market data, which really doesn't make the Fed's not only their decision making, but also how do they even talk about what's happening? It's kind of hard to put these things together. And really what the Fed wants to do is see momentum. They want to talk about, okay, there's momentum happening with inflation going down and the economy slowing down. And so they'll feel more confident with lowering interest rates. As we saw with the European Central Bank last week, they did lower interest rates. And of course they cited, momentum and inflation starting to moderate, and they believe that it'll continue to do so as the year goes on, but they wanted to cut interest rates to try and stimulate the economy or to shift in overall monetary policy. Now, really, ultimately, what that looks like from a 30,000-foot view is that the European Central Bank has made a decision that they're going to just cut interest rates without hitting their inflation target. Now, that could be a sign of what the Federal Reserve will do later this year, as the market really is projecting that the Federal Reserve will cut rates twice this year. And of course, if we look at what the projections are for where inflation will be by the end of this year, the overwhelming consensus is that we won't be at 2% inflation. So this could be a very insightful next couple of days as we get this market data released and the dot plot is released and see how the market reacts to it. The European markets had a bit of a subdued reaction to the interest rate cut, mainly because it was projected for a long time. And so a lot of it was already priced in. But as we hear from Fed officials in terms of what their updated views are, I think this gives myself, other financial advisors and investors a lot of things to work on in terms of where do we think interest rates are headed. And so my view so far as the year has gone on is that I think we'll get possibly 1 interest rate cut this year. I'm not optimistic in terms of thinking about getting 2 cuts, but I'm also not yet at the camp of thinking that we won't get any interest rate cuts this year. But, as the year is going on, the 0 cut scenario is starting to seem a bit more likely. And so I'll be paying a lot of attention to what's going to be released tomorrow. I hope you will as well. And if you have any questions or would like to get in touch with us at all, please don't hesitate to reach out. Always happy to answer questions. But that's really it for this week's episode of Money Minutes. Thank you so much for tuning in, and I hope you have a great rest of your day.